Ospriae, an investment management firm focused on investing in basic industries and the commodity space worldwide. First up, happy birthday. Very nice to have you here on your birthday. Greatly appreciated. A young man here to tell us what is going on. Look, Alix didn't mention it. Let me mention it. Are we in a super cycle? We're certainly seeing surging prices. If we are in a super cycle, where's the sweet spot?
So the thing we wrestle with is the terminology from that really sort of to us has a dual meaning of both scope and scale and duration. And so we believe that, this something is a cycle that started last May, and you're going to set records in terms of number of commodity prices. But the buy any commodity and they'll just go up phase is transitioning to a point where it's going to be a little bit more idiosyncratic. And so, yes, it's going to be a cycle that's super. We expect commodities like copper or even potentially something like Robusta coffee to set records. But here you need to be more selective. As you saw in the 20% sell-off in nickel, that was something where people were trying to discount a potential balance sheet middle of next decade, and supply reacts to prices. And so whether it's hogs or zinc or nickel, a lot of those stories are priced in, and you need markets, as we spoke about, that are still to come, whether it's natural gas, crude, copper. And so this is a market where I think still there's another 100% to go in the total commodity index, but it's going to be much more stock selection specific in terms of the commodity securities you pick.
And just to, toot your horn here, natural gas you picked before we had that huge run up. So I'm wondering where you do see the opportunities now when some of these commodities come off.
Well, natural gas was amazing around the world in a number of sort of U.S. regions. And that if you take a look, sort of the 1 hub, you went from under $3 to over $600. And so you got the explosion in some of the bases, but the main central liquid pricing point for futures of the hub barely went up a little over 10%. And that forward contract for February of next year, the middle of winter, is still only around $3. Whether that price is 6, 10, 12, especially if you get a good winter or higher, it's that 100+% move that is, to us, we think is like the majority of outcomes you should see for that pricing point.
Dwight, a lot of money is being thrown at the wall right now, and governments are hoping it sticks. You're certainly seeing that in the United States, massive stimulus being applied to the economy, but it's being applied in relatively short order. Do we get a boom? Then do we get a bust?
So again, that's sort of where I think you need to come out to the individual commodities that have their own unique microeconomic fundamentals, in that relative to the investment and the change in demand profiles for certain commodities, with people fixated on carbon and carbon elimination, whether it's the capping or even elimination of supply for certain industries in China like aluminium, or the material greater intensity of use of copper. Those are the ones that are going to really lead from here. And so this is where you have to get more specific. Crude oil for next year is something that's interesting to us. It's done better and been tighter due to greater discipline by ROPEC than we expected. But I think you'll see really strong markets for that, especially WTI, over the next 18 months, but especially 22, and gas, but not everything. We spoke about grains. They've had a really solid move. We're still positive for them in the forward backwardated markets, but unless you have a material weather issue in a major growing area this summer, it's tough to really see something more than 10%, which is good in commodities, higher from here. But you need an incremental catalyst that's not definitive there to get massively higher percentage moves in those areas.
Aluminium, fine. I'm outvoted. I'll have to start saying aluminium now. Dwight, I want to raise something that I've been reading a bit about, particularly when it comes to the agricultural market, that a lot of the new technology and efficiencies, some of which you invest in, are actually going to make the super cycle for things like crops a non-event, because you'll be able to ramp up faster, deal with issues better, get more out of what you plant. Are you noticing that in ags or other commodities at all?
We're definitely seeing the higher productivity growth over time in agriculture. The issue is that is something that is a glacial, but in some areas accelerating trend in terms of food and food production productivity. But it's really going to hit much more in terms of fresh fruit and vegetables rather than the row crops to start. And it's going to be more middle of this decade going forward. You've baked in some of the tightest balance sheets ever for soybeans, corn, cotton, bean oil. And so it's really tough for you to not to have the need to sort of incent incremental supply and incent out demand, disincent demand in the short term. It's that ag tech, though, which is going to dramatically change the environmental footprint. As you go to truly distributed controlled environment agriculture, so you can eliminate pesticides, cut water use by 99%. There's companies out there like cubic farms or freight farms, which can put farms in your neighborhood, and that is going to revolutionize the fresh market much more than the row crop market.
What kind of timescale are we talking about with this in terms of the impact? How long will it take to get this up and running? I was reading a piece over the weekend talking about local salmon production. You basically set up huge pieces of water and you basically grow salmon, but you do it really close to the market. How is this going to change the whole infrastructure around the way that we produce food? And I'm talking about the way not only we grow it, but move it.
So the answer is the production systems you have now, whether it's Taylor Farms or even newly public company AppHarvest, still rely on centralized locations, which you have to truck or rail everything. The revolution, which I think will have a material impact to carbon footprint and logistics, so you actually get to the last mile, is really going to be available in a number of areas and regions as soon as sort of 2024, 2025, and dramatically expanding the tail end of this decade. And so whether it's a cubic, a freight farms, a local urban vegetables, it's those people who can put a very low capital intensive unit, low carbon, low inputs, that can deliver it fresh without the problems of disease you've seen, eliminate a lot of the wastage and eliminating a lot of fuel. And so you're talking about something that you should start feeling that impact within 3 to 5 years, which is nothing in an investment time period like this.